The greatest oak was once a little nut who held his ground. My friends, every day, keep your nose to the grindstone. Don't give up. You can do this. I apologize for not putting a show out Monday, Tuesday, Wednesday, Thursday. Well, I guess I did put a show out Monday. That was the weekly review and forecast. But I didn't record the show on Monday. Didn't record a show on Tuesday. And didn't record a show on Wednesday. And I'm barely doing one today. Just as a little backstory, I got food poisoning on Sunday night, and then that somehow turned into pneumonia. I have slept maybe 6 hours in the last 4 days and eaten a half bowl of cereal, a handful of pistachios, and one other small item. So my brain is struggling to keep up with the stimuli around it. I am getting better, and I just could not deliver for you guys. Patreon members, we sent out the weekly vertical crossovers up and down. Check your email. I will try to make this quick because I am struggling. Okay, let's talk about where we are on the S&P 500. It's trying to cross over going down. That may very well happen by the end of the market tomorrow after topping back on the week ending the 7th. And again, double check everything I say. I have had a fever of at least 101 for about 3 days now. But it's part of my life. I'll deal with this. Now, let just be fairly warned. Does look like we have a weekly vertical crossover trying to form. Derivative oscillator's also been dropping for 3 weeks now. Let's look at the 2-day. Of course, it already dropped. It's really been flattening and sliding sideways. We see where the Monday, Tuesday was up a little bit. The Wednesday, Thursday sort of trying to resume down motion. It's good to see that the 2-day is still down for those of you thinking about shorting the S&P. Derivative oscillator, of course, gaining momentum. The half-day, however, is up. It crossed over on Thursday morning and gained a little. Well, it ended up, the candle body itself was a little higher, but as far as the peak goes, it was a little bit higher too. That price percent oscillator is pulling away from the red signal line. You don't make your determination solely on any chart, except for the weekly when we have weekly vertical crossovers, but do pay attention to what's going on that 4-hour and that 2-hour when we get, 2-day, when we get toward the close of the market tomorrow. Now, let's go to the Qs. What do we see going on there? Well, moving into the third week of down movement, those of you who jumped in to a down move around the 334.87, we'll say 335 mark, have been served well. The low so far, 316. We were 30 cents away from that low this week. Price percent oscillator is moving down. Derivative oscillator's gone to negative. So keep an eye on things there. What about the 2-day? Well, the 2-day, again, like the S&P, has been flattening and running sideways. Saw a little strength in the downward momentum. Not a lot with this latest candle. A red spinning top, but it is solid red. So keep an eye on things there. This half day has moved through the 2-day trend line. Let's just see that 2-day trend line if we could draw it better. I don't mean better to help us achieve what we want to achieve, but to try to connect more candles. We want to find 3 or more candles to connect, but we don't want to do something like this where it just gives us a higher threshold to pass. We don't want that. So I would say you always want to err on the side of being too conservative on where you draw your trend lines. Trend line, of course, on that 2-day, the price percent oscillator rather, is flat. So we've moved that a little bit. We look at that half day, we still crossed it in the morning, a little further in the afternoon. So keep your eye on that, if you're still in that Q's trade, you may have already taken your profits. And again, have it hit a lower low, which would be nice to see. But again, obey the rules you set for yourself with your profit and loss bands at the beginning. By the way, everything up for the day. S&P 500, 1.08. The Qs, 1.93. And 20-year bonds, 0.82%. We still see 20-year bonds are positive as far as the price percent oscillator and the derivative oscillator goes. That's interesting. With 2 weeks of down movement, sliding sideways a lot. We look at the half day, and we can see where it has not managed to cross over going down, but right there close to the signal line. Derivative oscillator still negative. So again, once we penetrated that 2-day and the weekly trend lines, it makes us very hesitant on things. So that's where we are on the 2-day. Lastly, let's look at the half day. That half day, we need to move that trend line down. And again, moving up, moving up, moving up. So we'll continue to monitor 20-year bonds. They are still in a confirmed up move on both the 2-day and the weekly, but it is strange as things just move. Well, they moved down and then sideways and up a little bit on this half day. Again, giving no super clear indication. That's the problem you get when you have a down move and then a pop-up and then a sideways slide devolving down. Again, remember, for the price percent oscillator to give us accurate signals, we want trending in one direction or the other, not both. That's where we are on bonds. Lastly, we go to gold. Gold up for the day, 0.46%. Of course, we had that beautiful weekly vertical crossover on gold that we've been waiting for so long at 166.50. And of course, gold has reached a high during this week of 177. That is absolutely beautiful. Remember, about the time gold peaks, that's when you hear all the ads to buy gold. So that'll be your marker to sell your practice trade in gold. So we see gold heading up strongly, derivative oscillator heading up, and prices well above the weekly and the 2-day. So let's move from the weekly to the 2-day. 2-day moving up quite nicely. So far this week, all 4 days that have passed so far, gold has reached higher highs. That's beautiful. We could probably draw a more accurate 2-day trend line at this point. Let's see what we can do. Well, we can't connect 3 or more candles. So we'll draw it there and realize that it's a very short-term 2-day trend line. Derivative oscillator heading up, price percent oscillator heading up. Half day, we see where things topped there on Wednesday morning, and again opened, got slower on Wednesday afternoon, and then tried to gain some energy throughout Thursday, but never reaching that prior high. That's why the derivative oscillator has been losing momentum, and that is why the derivative oscillator is still positive, but down. That's where we are on our 4 big charts. For you Bitcoin fans, let's take a look. Bitcoin has had a big down week. Now, we did see a reversal today that I see, 14.96%. But again, Bitcoin ranging through the week from $54,883 a Bitcoin to a low of $36,543. That's one hell of a range, isn't it? Well, Bitcoin is spiking down on the price percent oscillator, derivative oscillator moving down. We look at the 2-day, and of course, so far this week, 2 big 2-day down candles. Price percent oscillator spiking down, derivative oscillator spiking down. So again, big down moves when we look at what's been going on the 2-day. Not surprising, because we, of course, had that 2-day crossover back on the 1st. They still had some up movement in Bitcoin, but that has never changed. And of course, that weekly has been moving down since March the 26th. And again, did see some up movement, but that's a danger zone right there. You could have gotten 3 weeks of up movement out of that, but you were getting some forewarning with that crossover going down after the peak the week of the 19th of March. That was where, well, let's see, did it peak then? It might have peaked that same week it crossed over. It was 59,041. Same. And then things, again, continued to move up for a little while, going all the way up to 63,000, and then started this move down strong. So let's look at the half day, and we see where Bitcoin down 1, 2, 3, and of course made some of a recovery on Thursday. Not a lot in the morning, but as we see, we did have that up move of 14.96% in the afternoon. A low of 39, a high of 42, 39,288, and a high of 42,009. My friends, thanks for putting up with me. I've never missed as many shows as I missed this week. I don't even remember how many years ago it was when I missed my last show. That might have been when I was sailing, deep water sailing, and couldn't get a signal. But anyway, I apologize. I will try to stay. I'll try to stay healthy for you. Thank you so much for being with us. God bless you all, and I hope to be able to do the weekly review and forecast for you tomorrow. God bless.